You've been saving for years, but you look at the 20% down payment you think you need, and it feels impossible. What if I told you you don't need 20%? What if I told you you can buy a home with as little as 5% down? Today, we're busting the biggest myth in real estate. The 20% down payment myth is the number one reason people think they can't buy a home. It's a huge barrier, and it's just not true. Let's break down the actual rules so you know exactly what you need. Here are the facts. For a home under $500,000, you only need a 5% down payment. For a home between $500,000 and $1.5 million, you need 5% on the first $500,000 and 10% on the portion above that. For homes over $1.5 million, you do need 20%, but for most first-time buyers in Hamilton, you're looking at a down payment between 5 and 7%. That is a much more achievable goal. So what's the catch? If you put down less than 20%, you have to pay mortgage insurance. This is usually called CMHC insurance, although there are other providers. This is an insurance policy that protects the lender in case you default on your mortgage. It does not protect you. You pay a one-time premium that gets added to your mortgage amount. And to be clear, this is not an added closing cost. It just gets tacked on to your mortgage. The premium is a percentage of your mortgage amount, and it's on a sliding scale. The less you put down, the higher the premium. For example, with 5% down, your premium is 4%. With 10% down, it drops to 3.1%. It sounds like a lot, but it's what allows you to get into the market with a smaller down payment. It's a tool, not a penalty. I have a calculator right on my website where you can actually check and see what those minimums are in actual dollars. Here's something most people don't know. Because an insured mortgage, remember that's less than 20% down, because that is less risky for a bank, they usually offer you a lower interest rate than they would on an uninsured mortgage, which is over 20% down. Sometimes the interest savings can actually offset the cost of insurance premium over the first 5 years. It's counterintuitive, but it's true. Don't be afraid of mortgage insurance. So let's summarize. The pro of a small down payment is obvious. You get into the market sooner and start building equity. The con is that you have a larger mortgage and you have to pay for the insurance. The pro of the 20% down payment is that you avoid the insurance cost and, of course, have a smaller mortgage. Also, it can take years longer to save, and in that time, house prices could go up by more than the amount that you would have paid in insurance. Buying a house is a big decision, and my first-time home buyer's guide can help. It has the full breakdown of the costs of buying a home, including a full mortgage insurance calculator so you can run the numbers for yourself. It's free to download in the description below. Once you have your down payment figured out, the next big hurdle is the mortgage stress test. I did a complete video on how it works and how to pass it. You can watch it right here. If you found this video helpful, please don't forget to like and subscribe. Thanks again for watching, and I'll see you next time.